This was surprising because we're all waiting for like commercial real estate to implode. Is this targeting that area at all? What did you make?
Yeah, I mean, firms like Blackstone in particular, has really gained from periods of market volatility. Now, they also feel some of that pain. We could talk about that in a second. However, raising money at this time, the largest ever $30.4 billion drawdown fund in real estate, gives them the opportunity to really capitalize when we see that kind of inevitable drawdown in pricing that we would see in the market. The thing about Blackstone, though, is that they're not investing in some of the classic real estate places that you would think they, I was joking with somebody yesterday that, the office is dead to Blackstone. While that's not quite true, it is the case that they have largely shied away from large office buildings, malls, and have really leaned into other things like logistics and rental housing, student housing, and things tied to many cash flow generating industries like biotech. So that's the big play here when you look at Blackstone and what they're trying to accomplish and why they've raised all this money.
Sonali, who's putting money in and what kind of rate of return do you think they're looking at?
Yeah, this is an interesting question here, too, because I think you have to look at two entities here. You have big institutions putting money into Blackstone's, big drawdown fund that we see here. These tend to be institutions that can lock up money for a long time. But we talk about this at a time where we're talking a lot about BREIT. This is that interval fund that everyone has been talking about. This is a separate fund that you're able to redeem money from, Guy. So when you're looking at, for example, BREIT returns, you're looking at returns that have been 12.3% over time, but a little less than 6% over the last year. And I look at BREIT for a second here because we are looking at these big money managers as they're courting both high net worth individuals as well as these large institutional investors, some of which are also in BREIT, this interval fund. And the question then becomes, is it better to lock your money up when you're thinking about the kinds of funds that you're thinking about that'll invest in real estate, which is a particularly longer time horizon here?
I just wonder about the knock-on effects. Like, I appreciate that this money is going to be in healthcare, student housing, stuff that should be safer and that has a longer growth potential. But if the commercial real estate market really seizes up, and if banks seize up, and the maturity wall comes, and everyone kind of gets squeezed, is there the potential of a trickle down, or are we just going to keep hearing, I have a long investment horizon, I'm okay?
I think that there's certainly an event of a trickle down, and that is the question you draw for Blackstone's existing portfolio. What does it mean for the returns that they're making on the assets that they already hold? What does it mean for potential defaults among people who are within those buildings and the ability to generate cash flow? However, I would also say some of the places that are already seeing stress, like iBuyers, for example, where you're already seeing pricing drop off, you're seeing firms like Blackstone really be able to dive into that opportunity and buy things on the cheap. So the net return coming out of this period will be very interesting.
Let's talk about the drawdown and how this whole thing is structured. How nimble do you think this fund could be? You talk about being able to dive in. How flexible, how nimble could this fund be? How many layers of decision-making are we talking about here in order to be able to pounce on some of these opportunities?
I think that's a great question, because you think about Blackstone, for example, and Blackstone now, Guy, you have to think about the scale of this business. This is a business that is more than a third of Blackstone's total assets under management. It is a huge business. And when you think about it, John Gray, who is the president and COO of the firm, this is where his heart lied. This is where he really made his name. Kathleen McCarthy, they work very closely all together here. So if you're thinking about bureaucracy within Blackstone, it's pretty nimble when you look at how they manage these real estate businesses. So to the point you're making, they can pull up multi-billion-dollar checks in a hurry if they want to. But again, I think what people are looking for here in the market overall, Blackstone are not with the industries that they like, or other industries, to commercial real estate's point here, the other investors that are looking, is the clearing price. Things are still kind of volatile, and I think it's a little uncertain here at what prices assets are going to be acquired for at the best price.